All right, back to work. Another great day comes to an end. Hope you guys had a fantastic Thursday, but it's about that time of day again, right? Time to get back to work. We're getting ready for Friday's trading session. Not just any Friday, though. Got a bunch of big news on our radar tomorrow to finish up the week. I got some great trades setting up for finally Friday trading session. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money going into the weekend. As always, we got a lot to cover here tonight. Before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy the video tonight, do me a favor. Will you hit that like button for me? Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for Friday. Friday is not going to trade itself. We got some big news tomorrow. Got a couple big announcements scheduled on the calendar for tomorrow. And I'll tell you, it smells like traps out there. It smells like traps. You can see here right now, right? We got bullish market, of course, the Nasdaq and the S&P. They've been kind of grinding their way higher here pretty much all week. But I'll tell you, we've got measured move. We've got major level of resistance. You know, we definitely have space to keep going higher to fill that gap from the end of last week. But I'll tell you, though, there could be some great bull traps waiting here on the Nasdaq and the S&P. We definitely are bullish right now, but I think we've got some great shots here for some reversals with some bull traps off the high. I'm going to cover the long side and the short side on the Nasdaq and the S&P tonight. Don't you worry about that. Over on oil, same thing, right? Oil is bearish right now. But boy, it smells trappy. It feels like this could be a bear trap, and I'll talk about why I say that. And most importantly, we'll talk about how to avoid being the victim of a trap tomorrow and how to be the trapper, right? How to be the one taking the traps, right, and making the money off those traps for tomorrow. So we're going to cover all that stuff here tonight in tonight's video. Before we jump in, though, and get each of these charts going tonight, I just want to make sure we're all on the same page for tomorrow. We do have some pretty big news tomorrow. We have arguably the two biggest news reports of the week tomorrow. The first one is that, not international trade, the personal income number. That you could say, if you take away Jerome Powell tomorrow, you could say that personal income known as the PCE deflator number. This has always been one of the Fed's main news reports, the way they gauge inflation compared to consumer, spending. So personal income and outlays, one of the most important news events we know. And remember, right now, anything that has to do with inflation is a red hot number right now because the markets are obsessed with the Fed and the Fed is obsessed with inflation. So I'm not going to try to pretend like I know what the markets will do after that number tomorrow. Remember, the news is noise. And so we're not going to try to predict what the news will do. We're going to trade the reaction. But I would imagine tomorrow, don't be late tomorrow because 8:30 Eastern time, you get some pretty good news as a potential catalyst for us tomorrow. And then obviously, unless you've been living under a rock this week, everybody's been talking about what is Jay Powell going to say at the Jackson Hole Summit on Friday. Now, we heard a lot from other Fed speakers this week. Every single Fed speaker this week has basically towed the line and repeated that same thing over and over. We are committed to, tightening up monetary policy. We're not done raising rates. It's been amazing that the markets have continued to rise and rise and rise this week, even as the Fed is dumping cold water on it, which is another reason why I think it kind of smells a bit trappy out there right now. Markets love to pump these things up and then dump them after these big news events come out towards the end of the week. So obviously, again, we're not making predictions for tomorrow, but we have to assume, though, that is another big milestone, big potential catalyst for us here tomorrow. So those are the two big announcements, the two things we know about tomorrow. Now, will we hear from OPEC? OPEC's been floating the idea of a production cut. Will we hear from OPEC tomorrow? Will we hear anything more about the situation with the energy situation coming out of Russia into Europe? Those are all kind of known unknowns for tomorrow. And Fridays usually tend to have some really good setups, that kind of 9:45 to 10:45 window. So definitely save your bullets for that kind of second half of the morning. Typically, Fridays are a little bit of an edgy start, and they tend to even out as we get going. So I'm looking forward to a very good day tomorrow in our trade room. Looking pretty good there. Personal income at 8:30, Jerome Powell at 10 o'clock. And, of course, it's a Friday. It's one of the last Fridays of the summer, so you better make that money early tomorrow and then go to the beach or go to have a barbecue or something, because we only got a couple more weekends of the summertime season, and then we get to work coming in after Labor Day. Okay, back to our charts though, right? The money is on the charts. Now, guys, I'm going to cover all my favorite trades on each one of these charts here tonight. You be smart to watch all the way through to the end, because I cover different trade ideas, different trade variations, and I usually save the best stuff all the way to the end. So I'll give you reason to stick around all the way to the end. Why don't we grab the NASDAQ first? We'll go NASDAQ, S&P, and we'll wrap up on that black gold, the Texas tea, the crude oil futures. Now, keep in mind, first of all, this is a 4,000 tick chart of the NASDAQ futures. This could be the micro NASDAQ. This could be the QQQs as well. So I have students trade all kinds of different variations of the NASDAQ in our trade room right now. Also be aware, a lot of what I talk about on the NASDAQ can be applied to the S&P or vice versa. So just be aware of that, right? Be aware that everything I say in the NASDAQ can pretty much be applied to the S&P as well, all right? So keep that on your radar. Now, there are 4 basic principles or key insights, as I call them, that are helping me navigate where my favorite trades are for tomorrow. The first one is this overall bear bias. Now, I know you look at the chart right now, you're like, bear what? Well, look at a 4-hour chart right now, and you'll see, even though we've made a pretty remarkable move here going higher this week, we do have that big push down in that 4-hour chart that will try to drag this market back to those lows here. So we do have kind of a medium-term bear bias here right now. So we'll be aware of that. What that basically tells me is with the buyers in control of this right now, this is where double top reversals come in handy, right? Double top reversals. If I have a bear bias overall, but I have a short-term bullishness right now, double top reversals, right? These are some of my favorite trades when we're short-term bullish, but long-term bearish, right? So we got that on my radar here for tomorrow. Next one here is a strong bull move. This is a pretty strong move, right? Pretty strong move. Both the S&P and NASDAQ made strong moves to finish up the session today. Why is that important? Well, because anytime we see a strong move in one direction, we expect a retest of that level. From there, do we get that double top reversal? Or do we get that blast right up to potentially that last week's close, which would make perfect sense, by the way, because if you recall, last Friday into this week's Monday, we had that complete bloodbath last Friday into Monday. It would make perfect sense that buyers want to go back up, tap last week's close, and then possibly get that done. That's why I said before, a lot of potential bull traps, right, on this chart right now. Next up here, we start talking about overhead resistance here. We have a triple measured move. You'll notice the market made that strong spike higher coming out of Europe. That's one leg. There's 2 legs, and there's 3 legs higher. Now, most of the time, there's always exceptions to this rule, but most of the time, most trends are going to go 3 legs before we either go into a range or we get some sort of really big correction, which could possibly turn into a reversal. What I like about this, or what is important to me, is that this becomes a very difficult area to be a buyer right now, right? And we get a range below us. Ranges, of course, are magnets, and so it's very difficult to justify unless we see something more here, unless we see more potential bullishness going higher. It's very difficult to want to be a buyer up at levels of resistance with a range overhead and a long-term or medium-term bear bias. The fourth and final clue here is this wide bull channel. You'll notice the market has been rotating back and forth from the low to the high to the low, and so we expect, of course, this pullback down around this channel low for a buy for the bulls, or this channel low for a buy for the bulls, right? This, of course, being the shorter term channel right there. That would obviously be the most aggressive place to be a buyer here right now. So those are the 4 key insights. Now, how do we make money on this? Well, again, buyers would love to buy pullbacks here, right? Buy pullbacks here. If we break out, I would imagine buyers will be trying to buy pullbacks there. At the same time, right? Bears are looking for that short off that double top. Bears can also look for a reversal going back down. We'll talk about that. And if we do get that somewhat anticipated, I would not be surprised at all if we come in tomorrow and we see another one of these big shocks going higher, taking out last week. Bears can sell right off the high of that as well. So let's talk about this now. Why don't we cover the pullback here first here on the NASDAQ? There's a couple ways in which I can buy this, and there's a few ways in which I can sell this. Now, first of all, on a shallow pullback right now, if I want to buy the low of this channel, my challenge is not direction. I have good momentum for the buyers right now, but I'm running into overhead resistance. So if I want to buy right now, that will be considered buying relatively high. What I want to do is I want to get just below the moving average, and I want to get what's called a trap entry. Now, traps are going to be they will soon be your favorite entry that I teach in my trade room. Traps are fantastic to, of course, trap in the sellers, right? Trying a couple times up here and simply buying into those stop losses. So a shallow pullback right now, we can't imagine there's gonna be a lot of buyers up here wanting to buy. And so we have to use the bears, use their stops as some gasoline, right? As some fuel to go higher. I would imagine last week's close becomes a very easy target there for the bulls. Now, as we go higher here, right? You got to think now, we're probably going to get some buyers coming in off the low of that channel. The problem with this channel is it's very wide, right? And the wider these channels get, the deeper that pullback is. And the deeper that pullback is, the stronger momentum is for the bears. In these cases, you want to try to trap in those bears, use their stops, right? Think about how you can, like I said tonight, a lot of trap potential on these charts here right now. So try to trap in those bears, let them get stuck selling short into a rising support trend line. And again, think about where their stops are, right? And I can use now those stops as fuel for a run back higher. We call these 1, 2 try failures. Think about where those stops are and buy right into those stop losses. That is a great way to be a buyer as well. So now we've covered the buy side on the pullbacks here. How do I sell this market? How do I sell it? There's really a couple ways you can sell it. Probably 3 different ways you can sell this. One would be a crown reversal. So buyers come in, they try once, they try twice, and now it's the sellers who are doing the trapping, right? The bears are doing the trapping. And again, I love traps. Notice how I use the 2 try rule here. Notice how the buyers come in. They try once to push it higher. They try twice to push it higher. Guys, the 2 try rule and traps are one of my favorite ways to find winning trades every morning in our trade room. You guys learned a lot about traps in our free trading classes. I get so many great emails from you guys, by the way. Keep those comments coming. I get so many chart screenshots of people every week right now showing me how they're using the stuff they learned from that free trading course, using things like traps and failures, which by the way, if you haven't done it yet, if you're one of the few folks right now who haven't taken that free trading class to learn all the traps like this, how to use the 2 try rule, how to find the right entries, what I'll do is I'll put a little link up here for you in the upper right hand corner. Grab that link, take my free trading course. If you're like me and you hate missing the best winning trades each day, or you're taking too many losses, the strategy I teach in that free trading class will get you into far more winners, help you avoid some really easy kind of rookie losses, inexperienced losses, and most importantly, you'll finally get some confidence to come trade every day, and hopefully soon you'll be trading it with us here in our trade room. That free class, right? Grab that link up there, that video class, perfect for someone who's trying to make the jump into full-time trading. So grab that link up there in the upper right-hand corner. That way, the next time we're at a level of resistance with a range below us in a bull market, you'll know how to time the perfect reversal with the 1, the 2, right, and that trap high with that crown reversal. I really like that short. What I also like a lot is let's say we do go lower. Let's say those bears get trapped and go back to the high now, and now it's mission accomplished, right? So we go lower, trapping those bears. We're buying off those lows. But remember, though, this is where the high is where we should be taking profit. So at that point now what I can do is I can rope in those buyers here now, let them try once, try twice, and I can sell it right back down again. Now, where would the bears want to go at that point? They're going to want to go right back down to retest that low. All right, so make sure you keep that on your radar for a target. And of course, if I can get those buyers trapped in up here, and I can sell into those stop losses, okay, that obviously that low, and then you got to think, right, potentially a run all the way back to the other side of that range could be in the cards there as well, right? So again, lots of ways we can trap traders on the wrong side of the market. And again, that's the easiest money you're ever going to make is trapping traders when you're buying or selling, and the other side of the market is getting out. Here's another one that you want to consider here. Sometimes you get these runs up, 1, 2, 3, and the market will simply V-top, right, and start to kind of collapse back down here. Here's another thing you want to think about on the pullback. So if we pull back underneath the moving average, okay, moving average rolls over now, and now the bears come in and they jump off that moving average, right? We call these 1, 2, 3 reversals. Now you'll notice, right? You'll notice a lot of times they'll pull back under the moving average, but they won't jump, right? The key is we have to get under the moving average and jump, right? That's the key to turning this trend around right now. Again, I can trap buyers in and I can sell off that high, but I got to be careful simply selling that pullback right there, right? We're a little bit too bullish to be selling that one. What I'll do is, once I see that 1, 2, and then jump going lower, strong move lower for the bears, suggested one another leg, I'm going to mark off a trend line off those lows. Draw the channels backwards. Pin it there up at those highs. And then remember, traps, baby. I always like to look left and find some prior swings. Now I'm simplifying this right now to keep it simple here on this video. As part of that free trading class, you'll learn about things like bull traps. You'll learn about things like buyer failures, pullback combinations. But the reality is, if we do get that 1, 2, 3 rolling over, right, I'll take any of those setups you guys learn in that free video class off that high. A really easy rule of thumb on these is the first leg and the third leg are oftentimes very symmetrical. First leg and third leg. Oftentimes this middle leg is a bit larger or smaller. More oftentimes, though, it's a little bit larger than that first leg. But you got to think, though, right? Those bears would love to bury that low, right? That 12,925. And if things really get carried away tomorrow, because we do have quite a bit of news tomorrow, we got some really big lows down there, right? Those are the weekly lows from earlier on this week. You got to think if this market completely falls apart, you know where it wants to go. It wants to go back and bury those lows. Because remember, right? Remember, this is that bloodbath I was talking about earlier, right? We had that big move down on Friday. It continued on Monday. It makes perfect sense. It makes perfect sense they were trying to run this thing higher, because who wants to sell way down here, right? So we anticipate as this thing runs higher, more bears will be coming in to sell this thing back down and really take out that low. Again, big news for tomorrow, so we'll see how the market reacts to that. Now that brings a big question though, right? That opens up another question for us here right now, and that is, so what if we go higher? Right? Can I buy it up here? Let's talk about that. Can I buy it as it goes higher? Can I sell it as it goes higher? Let's talk about some scenarios that we can look for here. Let's do that in the S&P. S&P, again, will be very, very similar here to the NASDAQ. There are 4 key insights here to the S&P, or the SPY, or the micro S&P, right? Whichever you fancy the most. Again, look at a 4-hour chart right now, right? Look at a 4-hour, look at a 60-minute chart. You'll see we've got this nice bounce off the low, but there's quite a bit of bearish pressure here in the medium term overall right now. Just like on the NASDAQ, we have a strong bull move going higher, right? That strong bull move going higher is going to want to retest that high. Once we retest the high, then I can look for that short back down, or we'll look and see if they break out and go higher. Same basic idea as we mentioned there on the NQ. Triple measured move, right? Most trends are going to go 1, 2, 3 legs. We're running into lots of resistance overhead, and of course a range below us. If you think about it, both the S&P and the NASDAQ today, they both kind of made these big triangles, right? They never really got much more than that, right? It was basically one big triangle right there. And so that triangle creates a magnet. Now, again, we're very bullish right now in the short term. So, this range may not be enough to drag the market lower, but it gives me a very good clue as far as what to look for when you combine a bear bias overall. Like I mentioned before, we may be short-term bullish, but that doesn't mean we can't be looking for retests, right? And a run back down here as well. So a lot of this, again, will be very similar to the NASDAQ. If we get a shallow pullback, we need some sort of trap, right, to trap in the sellers, right, to get there, to use their stops as some fuel to go higher. And we think the market probably wants to go up to that last week's close, right? Same thing as the NQ. If we pull back, we want to grab those stops, trap in the bears, and make that run higher. Once we get back to those highs, now at this point now, it's strong move higher, mission accomplished. We can now look for those bulls to get trapped in, and we can rinse and repeat and sell it right back down again, back down to those lows, back down to those lows, etc., etc. So none of that is very different there between the S&P and the NASDAQ. And one more thing too, I didn't mention this on the NQ. We talked about that 1, 2, 3 move, right, on the NASDAQ, and how we like to look for those strong runs down, find that channel, then grab that trap, right? Get above that prior swing. We talked about that earlier. That's a great short. But think about this one too on the NASDAQ as well and the S&P. What if it simply popped and then began grinding down like this? See, that's another one you could easily look for, right? The grinder, the old, as we joke around by saying our favorite dance move this summer, right? The summer dance move here has been the pop and grind. It really has, right? It pops down and it begins to kind of grind down like this lazy bear trend. Those are great. I love those types of setups because you can find a trend line off that low, bring it up around that high, and then go picking your spots. What you want to do is ideally, you want to get above one of those prior swings, right? Get above the moving average. The prior swings are where you get your trap entries. The failures come in off the moving average, right? Talk about trapping in traders, right? Talking about using stops to fuel your profit targets. That's the way you make some money on those pop and grind going lower. And again, be aware that first leg, third leg is oftentimes very symmetrical. I would definitely leave a runner though on a short like that because you can imagine they've got those lows on their radar. So quick recap there, right? On the S&P here as opposed to the NASDAQ. Now we have the challenging part. What if the market runs higher, right? What if we run higher here? So as we run higher, we have to be aware of the situation we're in. We don't normally have to worry about this bigger picture stuff, but because of the situation we're in right now, where, again, you can kind of anticipate there's going to be a little bit of shenanigans going into this big announcement tomorrow. It wouldn't surprise us at all if they're pumping this thing up right now just to dump it down to finish off the week. It also wouldn't surprise us if we made a run back up to last week's close that gap that we saw, and then make that move back down again. So we have to be aware that as we go higher, we're going to be walking right into a lot of headwinds. So the goal for the buyers in this situation is going to be looking to trap in sellers for a retest of that high, and then we can trap in the buyers for a short off the high. All right, I'm sticking right on that theme of traps here for tomorrow, because the more you look at these charts, the more you realize almost every single move is walking into a potential bull trap or a bear trap, as I've tried to show you guys already here. So let's say, for example, let me get rid of some of these channels here for a moment. Let's say, for example, now we open up, we pull back, right, and we blast going higher. What I'll be looking for here tomorrow is this sequence. If we blast and go higher, right? We basically, pull back, we blast, go higher, strong move. It's going to want to retest that high. The sequence I'll be looking for on this is going to be those traps, right? Anytime we see a strong move, we expect a retest. I'd like to get underneath that moving average, Okay, just like we saw today, right? See how they got this thing just underneath the moving average, and then bears try once, bears try twice, blast, right? They go lower, bears try once, bears try twice, blast, right? That's the same basic idea I'd love to see up here. So if I can get that strong pop higher, that gives me that strong move, and then it's all about getting underneath that moving average, using those bears, right? Because they're going to come in, they're going to go, okay, let's try to short this thing. This is major resistance up overhead. The problem is, remember, when you have a bullish market like this that makes a really strong move, you really want to respect that direction until we either A, get a reversal, or B, retest that high. Once we retest the high, then it's mission accomplished. Now the buyers take their profit, and we can then get a lot more aggressive on the short side. Does that make sense? Right? You don't want to fight the direction of those strong moves. The sooner you understand the value in those strong moves, it'll be so much easier for you to avoid losses. You know, one of the first things I look for every morning is a range and a strong move. Ranges are magnets, and strong moves tell me to respect that direction until we retest or reverse. So again, trap those bears in. We need their stops, right? We need their stops as fuel to retest the high. Then keep an eye on this, right? So once we get that trap, we can buy back up to retest the high. And, keep in mind too, right? Maybe there's a bigger channel out here. I'm always looking left, finding prior highs, right? Finding those hidden, you know what I mean? I'm always trying to combine previous highs. I'm always looking for those levels. So, you can assume we'll be trying to combine this with the low of a channel, right? A prior swing high like that. That will obviously give you a lot more reliability on that trade. So we trap in those bears. We go back up to retest the high. Now, think about it now, right? All the smart money, they're buying low. Okay, anybody who buys up here now, these are the weak hands. These are the inexperienced traders. I would imagine they go back up, right? Tap that last week's close, and now buyers come in. They try once. These are the weak hand buyers, right? These are the inexperienced buyers. These are the buyers who didn't have the guts, right? No, these are the sellers who got stopped out here and then decided they're going to flip their position and buy right there. I know I'm not the only person that made that mistake when I was a rookie. Right? How many times as a rookie did I look for that short, right? Coming off that high, get trapped in, right? Trapped in, and right as it's ripping my face off, I go, okay, uncle, I'm going to be a buyer now. I buy now, and oh no, I'm back to retest the high, and I'm the trap now. And now I look for that short. Now, one of my favorite reversals on this is that double top reversal, and then as it dumps back down again, I go looking for another channel, right? And then look for that short off that channel high. Okay, this is the sequence that I would love to get at least a chunk of this one here for tomorrow. We're probably not going to get perfect setups across the board because we got a bunch of news tomorrow. But if I can trap in those bears, get that profit target off of that high, and then again, get the weak hands trapped in at the highs, use their stops as fuel, right? And then as it rolls over, we then look at that new channel. And obviously I'm simplifying it right now, but a bull trap set up off the high, a buyer failure off the high. A lot of times what happens is they do this, right? They'll pull back, they'll trap in below that moving average, go back up to retest that high. And then as they come over now, right? Buyers once, buyers twice, stops are sitting right below those lows. They're at a major area of resistance, and oftentimes it'll begin to roll over like this. And once it rolls over, it's game time. Mark that low, mark that high, right? We start thinking about where those prior swings are, getting us above the moving average, getting the buyers to come in, try to buy it, use their stops as fuel, and we're running it probably back down into that trading range at that point, at least, of course, back down to take out some of those major lows. Okay, that's another great setup we could look for here for tomorrow. So as it goes higher, looking for that retest, and then looking for that double top reversal off the high, and then trade that turn, right? Trade that turn as we go. Also, too, don't forget, right, as we go higher, you could also look for those big crown reversals, right? So as we come in, right, buyers try once, they pull back, buyers try twice. This is a little more aggressive, right? A little more aggressive because if you haven't retested the high yet, that's why you want that trap, right? The reason why you want that 2 try with that bull trap is because they haven't retested the high yet, right? Once they retest the high, then it's mission accomplished. Then we can get a lot more aggressive and we can sell in the stops from there. And again, you'll see a lot of examples of using stops and traps for fuel as part of that free trading class that I mentioned earlier. Okay, keep an eye out too, right, for like a V-top. You know, we go higher, the bears come in, they jump off that moving average, start to run lower, right? The minute they jump off that moving average and start grinding down, find that low, mark that high, right? Makes sense? Now, at this point now, for whatever reason, again, this would make perfect sense tomorrow, by the way, big V-top off that high, and then all we're doing here is looking for those shorts off that new channel, all right? Another way to sell it as we go higher. The key will be if this thing blasts and go higher, look for that retest, and then we can get a lot more aggressive on that short going lower. How am I doing so far? Are you agreeing with this? Do you disagree? What do you think? Would you let me know? I would love to know what you think. Am I crazy trying to sell those double tops? Right? Am I on the right track? What do you think? Let me know. What's your vision of the market? I'd love to know in the comment section below. Let's wrap things up tonight on the oil. Boy, talking about smelling like a trap right now. Got a lot of traps right now on the crude oil. Tomorrow must be a news day because it reeks of traps here on these charts. How about some key insights here on the oil? First of all, the 4-hour bias, right? 60-minute bias, 4-hour bias. Everything's still pretty bearish right now overall. We have a strong move lower. Anytime we see a strong move lower, what do we expect? We expect we're going to see another leg to retest that low. And then from there, can I buy it back up? Yes, we can. Can we sell the breakout going lower to maybe 90? Yes, we can. But we do expect there to be a retest of that low. But before we get too aggressive selling on this next pullback, there's a bigger picture range out here that we'd be foolish not to at least understand and respect here right now. You'll notice here, for the most part, we have basically just been swinging back and forth off this bigger trading range. If you extend out this range a little bit into the future here right now, you can see we're pretty equal, right? Move up, move down. There's a trend line going to come down off those lows. That's pretty convenient, right? Pretty convenient here with a range in the middle. So what does that really mean to us? Well, what it means is that this could easily go all the way back up and then end up back down, right back down into that trading range. So buyers definitely have the potential here for a long side trade off the lows. Sellers would definitely love to sell off the top up there, right? Those are probably where the best trades are going to be for tomorrow. I would also imagine too, though, because we have this strong move down, I would imagine there is some money to make shorting, right, off of some of these trend lines coming down, prior swings going lower. I'm going to get rid of this larger range there just for a moment here. So how do we make money on this? Right? Well, of course, right? The buyers, I would say, have the hardest time right now because the overall momentum is bearish and the short-term momentum is bearish. So buyers, of course, I would think right now the best entry long would be a double bottom reversal. Right? I would also think too, if the buyers can get some sort of really strong pop, right? Like really, really strong pop going higher, we can probably go out, find some channels, grab that pullback, right? And then once they double top, then we could think about that short back down again. So buyers definitely have some wiggle room here. But again, you got to be a little careful here because of that overall bear bias. The sellers right now have all the options. They want to sell up inside resistance, right? They want to sell there. They want to sell if we happen to go all the way back up. They want to short that top. That would probably be one of the best possible setups for the bears tomorrow. And let's face it, oil is all news driven right now, right? So will we hear from OPEC? Will we hear from any of the major oil producing nations? Right now we're coming off that little hint of a supply cut. OPEC just teasing us with the idea of a supply cut earlier on this week, and we of course anticipated that going back to 95, and we pretty much got there at that point. If they were to walk that back tomorrow, where do you think the next big round number is? Yeah, next big round number is at 90 even. So you got to think that 90 even. If this really does start to kick into gear here, you would think this market would like to go back to 90 even if it has the momentum to do it. So how to make some money on this right now? Think about traps, right? Think about traps as we go higher here. Remember, the big concern is that big trading range, okay? That big range up there. So right now, I have to trap in the buyers here. There's a trend line coming down overhead, a couple different trend lines coming down overhead. I like the idea of the short here, but I need something to give me a little more of a catalyst, a little more of an edge over the other side of the market. Let those buyers try it once. Let them try twice. All that, right? All that momentum. Find those stops, right? And look for that shot, going back down to retest the low. I like that trade a lot. Take that profit off at the low, and then what do you think? Yes, trap in those bears here, right? Get those bears trapped in, and we can basically buy right into those stops back up again. Because again, we are at some major support here. I don't want to be a buyer right now though because of the strength of that momentum. So I'll sell it for a retest of that low, trap in the buyers, retest the low, and then pick it up from there. Let the weak hands come in. Remember, this is a horrible place to sell. Okay, professionals are selling up here, right? They're not selling down here. So these are the weak hands, right? These are the inexperienced. These are small trade accounts. There's not much capital for them to defend themselves. And if we can get those stops to get run, they're going to want to run right back up to retest that high, and then potentially that runner back up to a major high overhead. So keep that on your mind, right, as we go higher. If we were to get that move higher, get that pullback off the moving average, and I mean really, really blast, right? This will have to be a very, very strong move higher in this case, because we're gonna have to kind of harness the momentum. You know what I mean? Not a good place to be buying up here, right? Top of a range, overall bearishness, right? So not a great place to be buying, but if I can get enough momentum, then we know the odds of success are pretty good. We're going to at least retest that high, right? Like back here, for example, right? It's that strong move higher there. They're going to want to go back and retest the high. Then this thing starts to fall apart. Same basic idea as we go. We pop up. We hold that pullback. We really jump off that moving average. We find that new channel off the high, new channel off that low. And again, I'm simplifying this obviously with some traps here right now, but I want to get under prior swings, under the moving average, use their stop losses and that momentum going higher as fuel for it, and run this thing back up to retest the high. Okay, once we get that retest of the high, now it's mission accomplished, and now we play that same game. Let those buyers, right? Let those buyers now, let them dig their own grave, right? Let them wrap that noose right around their neck as they buy into that high. Once they've now tried twice, right? Lower lows, buyers want to buy low. Then we start thinking about, okay, stops are sitting right there, and I can short this sucker back down into that trading range. Find that new channel, right? Find that trend line off that low, find that channel high, and that's where those traps come in. And that first test, as we always say, first test is the best test off the high of that channel. Okay, that's the same sequence we talked about on the S&P and the Nasdaq earlier on in this video. So keep that on your radar as well. We see a lot of that dance, right, that goes on every day across all of these markets. The next big question, I think, is what if we go lower? Right? What if we happen to kind of grind lower? You know, what if all we do is trap high right here? You know, how could I sell this thing if we don't get that deep pullback? Well, first of all, as I mentioned before, if we do end up grinding down here, right, we are overall bearish. Keep your eyes on these trend lines and these prior swings. And the goal will be to get that pop up. Again, like I mentioned before, trap in those buyers and use their stop losses along with that momentum to fuel the move back down to retest the low. Okay? The only time where I would be able to get a little more aggressive on that short would be, let's say, for example, we retest this low, we pull back, and the market just simply blasts, right? So in that case, we're breaking free of that range low. Remember, the big concern I have is there's a trend line right here. You know, that's why I want to trap in those buyers, right, to sell into it. But if this thing just starts to rip and run lower, you know what I mean? if it really starts to really rip, which doesn't seem likely right now, but who knows, right? Tomorrow's a news day for us. So if it really rips and runs lower here, now what we'll do is I'll tighten down those channels a little bit, right? Find some of those prior swings. And I'll get a lot more aggressive here if it really, really rips, trapping some of those buyers above the moving average and back down to retest that low. So keep it in mind, if it really pushes, remember, the stronger it pushes, the more aggressive you can be here on that pullback and trapping in those buyers above that moving average. Boy, I'll bet you're sick and tired of hearing the word trap after tonight's video, but that's exactly what these markets are all about for tomorrow. And it makes sense. It's a news day tomorrow, right? Got Powell speaking. We've got PCE numbers. It's a Friday. There's going to be a lot of potentially money-making traps for us tomorrow morning in any of these markets that you want to trade. Now, the game plan is all put in place. Now, tomorrow, we're going to come out and we'll trade this stuff together. Guys, if you're missing too many good trades right now, or you're taking too many losses, or if you're like me and you're making a bunch of mental mistakes early in your career, I was an emotional mess when I was a new trader. I was chasing markets, revenge trading. I think I made every mental mistake in the book, and I've learned from that, and I've got the whole entire system laid out for all of our students to come in and help make it easy to know exactly what a good trade looks like. If you want a great place to learn and trade along with us every day, our trade room opens up every morning at 8 o'clock Eastern time. Start with that free trading course that I mentioned earlier. Grab the free trading class, learn the basic fundamentals there, get a taste of how the system works, and that'll get you ready for trading with us every day in our trade room. I'll put all the membership links, all the free course links, everything you'll need in the description of the YouTube video. I'll put some buttons for you on the website there if you're on the website right now watching this as well. If you have any more questions, please don't be afraid to call the office. I'm always here. You can always call that toll-free phone number. We have live chat you can always use as well. And of course, you can always drop questions in the comment section below. I'd love to know what you thought about the video tonight too, so feel free to drop me some feedback in the comment section. While you're down there, hit that like button if you enjoyed the content here tonight. And if you want to see our next video upload, hit that subscribe button, hit those notifications so you're notified every time I publish something new. Guys, that's it for now. Get some rest. Going to be a busy, busy end of the week tomorrow morning in the markets. We'll see you guys tomorrow morning. If not, we'll come back and do it next week. It'll be a full week next week into that holiday Labor Day weekend as we squeeze out the last few drops of the summertime season. If I don't see you guys tomorrow morning at the opening bell with all the members in our trade room, have a fantastic, fantastic summertime weekend. I'll see you guys on Monday. And as always, be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.